hole, which was basically digital identity. So around that time, I was looking a lot about how financial access can be enabled and sort of where's the next wave in fintech. And really quickly got into that rabbit hole of digital identity, which is essentially, it's such a big enabler of financial access. However, it's been done really poorly over the last 15, 20 years. If you think about how the internet has evolved and where basically most of our digital identities are owned and controlled by third parties, whether these are the Facebooks and Googles of the world, or whether these are governments, banks. So we tend to not be able to control our own data and our own kind of security online. And so once I got into that rabbit hole, of course, blockchain-based identity at the time was just starting to develop. And I ended up working in that space for several years at a company called Consensus with a team called Uport, where we built a lot of the foundational technology of how that may look like, where essentially users are able to control pieces of their data and then be able to share with third parties. And all of that is done in an encrypted way. And so as part of our work there, we worked a lot with the EU and with the UK and a lot of different, I would say, regulators and governments around the world, especially if you think about the rise of GDPR and things like that. And last year, basically, the global regulators first introduced a regulatory framework for digital assets. And from my perspective, I saw that as a really big, I would say, opportunity for the digital asset space to basically grow and gain more adoption because it introduces a lot of clarity. At the same time, it does introduce a lot of challenges because essentially what regulators have said is a lot of existing laws that exist for banks are now extended to digital assets without really taking into account that the technology layer looks very different. And so there was a gap in solutions in the market, and that's essentially how we started Nota Bene earlier this year. Just a quick few remarks, and of course we could talk later more about that. But I just want to say that I think we're in a very interesting time right now before digital assets really take off in a very big way. If you think about the last decade in terms of mobile phones and how adoption worldwide skyrocketed, I think that digital assets has the same potential over the next 10 years. Especially if you think about right now, like every basically major central bank is already pushing forward with central bank digital coins. People have likened that to a space race. If you think about the, I guess, implications of this digital money in the hands of citizens, you think about peer-to-peer payments and cross-border. And of course, this is great because here we have a much cleaner settlement layer and lower fees. And then if you think on the institutional side, you think of capital markets where traders and there's a lot of capital inflow and a large opportunity also to open up that market with innovation digital assets. Of course, though, there's, I would say, a big difference, of course, in terms of also how like mobile phones got adopted the last decade, because this touches money, this also, of course, touches financial criminals and others. And so there's several aspects here that still need to happen before wider adoption. I'm just going to highlight three. So the first one, I would say there is a big gap right now in terms of, I would say, almost people who understand this technology and people who don't, whether this is at the regulator level, whether this is in terms of kind of fintechs themselves, or whether it's end users. And this is starting to create a chasm. And I think that if not fixed kind of soon enough, it could have a potential to create a new digital divide in terms of who has access and who has not. The second aspect is regulation of digital assets, which I mentioned briefly as why I guess we started Nota Bene. I do think that introduction of a regulatory framework for the space is a very good start, but it's just basically, it is going to take quite some time, I would say, for it to kind of evolve and be adopted. The issue here is there's a global regulatory framework, but it gets adopted at a national jurisdiction level. However, inherently, this technology does not respect borders. And so it's just a bit tricky, especially in that kind of gray area of the next 2-3 years while it gets implemented everywhere. The last piece is the maturity of technology itself. There's still a lot of, I would say, risks here because while it's kind of been going really fast, it hasn't really been stress tested at scale. We haven't really kind of seen failures of edge cases. We've seen, of course, traditional financial services take so many years to get to where they are today. And even then, we still saw like the 2008 crash and things like that. And here, of course, minus if you think about all the bureaucracy and of course the reliance on technology sounds great on principle, but as we know, technologies fail all the time. So I would say that this is one more reason why, I guess.
Thanks, Alice.
I have to take care
that's really great. Hisham, do you want to go ahead now and give a bit of background of yourself and lean tech and much like Alice, a couple of opening remarks on how you see the current state of things?
Absolutely, it's tough to follow Alice. She's extremely impressive, but I'll try. So, I'm Hisham Al-Faleh, Saudi Arabian born and bred. I studied in California. Was privileged to have front row seats to some of the most incredible technological revolutions that have shaped society as we know it. Uber was born by when I was in Silicon Valley. Airbnb was starting to take shape. Cryptocurrencies and blockchain, to Alice's point, was also a nascent technology, and today has obviously taken over so many different aspects of the world. And most importantly and most relevantly for me, as financial technology became a thing. Fintech obviously has shaped the lives of billions of people, it's safe to say at this point. And that was obviously something that I was really taken aback by, a multi-century old industry that was basically being upended within the span of a couple of years through innovative business models and cutting edge technology. So that really inspired me to explore that space further. I was an avid and active angel investor at a very, very small size in a number of companies that were born in Stanford dorms. And that was actually my bouncing board into exploring that space a bit more closely. Returned to Saudi Arabia in early 2019 after spending a few more years investing in more institutional level, and was a bit taken aback by the lack of penetration of financial technology, if I'm completely honest. It was the same exact process to open a bank account that it was when I left to college and obviously to work after that. And so I felt like there was a mismatch between the supply and the demand for fintech. If you look at the Middle East as an ecosystem of multiple countries, predominantly they're being tied by more or less same language, same culture, very, very young populations, high digital penetration, strong internet penetration. Their consumption levels are very high, and yet you see the supply of financial technology and the proliferation of fintech in their lives to be very shallow, especially when compared to other markets. I mean, if we look at Poland, for instance, as one example, Poland is a market of almost 38 million people, and they have more fintechs active there than the whole Middle East combined. And you're talking about 10% of the population of the Middle East, and a much, much smaller country, as a GDP comparison. So there's obviously a lot of catching up for us to do. That's the bad news. Now, the good news is we're obviously making really great strides. The regulators in the last couple of years have initiated multiple initiatives such as fintech sandboxes, financing programs, and other such initiatives that are actually creating a huge wave of new up-and-coming fintech entrepreneurs, avid developers that want to commercialize their products, and other such movements that will support the growth of this sector. And so I'm very long fintech in the Middle East. I believe there's obviously some inherent structural issues that need to be solved. And that's what we're trying to do at Lean Technologies. Just to 60 seconds on that. The regulators are obviously doing a great job. As I mentioned, the population is well suited and ripe to consume these technologies. But unfortunately, what we found to be the case was that the infrastructure layer was basically non-existent. There was no way for developers and fintech companies to integrate into the banking system, to access customer data, initiate payments on behalf of customers, and do a swath of other services that are necessary for them to enter the market. And so we saw that as a serious barrier to entry at Lean, and we decided to basically tackle it head on. We're basically building a regional solution that allows any developer in the world to integrate to any bank in the Middle East through one very seamless API integration. They can get up and running within less than a day. And we do that in a way to kind of remove that barrier to entry, remove that burden, and hopefully enable the financial services to kind of be at the cutting edge to first and foremost serve the consumers and the businesses in the Middle East. So that's us. That's me in a nutshell. I told you it was going to be difficult to follow, Alice, and I'm certain it would have been more difficult to follow Mark as well. So
thanks, Hisham. That you covered a lot, I think, in a fairly decent clip. Mark, last but not least, go ahead.
Yeah, I was going to say, if Hisham thought it was difficult to follow Alice, it's impossible for me to follow Hisham and Alice as well at the same time, but I'll give it a go. So as Tom said, I'm the co-founder and the Chief Operating Officer of the Fintech Power 50, and editorial director of the Fintech Times. The Fintech Power 50 is an annual guide to the most innovative and disruptive fintech companies around the world, acting as an accelerator program to help the scale-up companies with their domestic and their global growth. And obviously, as the Fintech Times, we're an editorial, newspaper-focused organisation curating news and views from around the world. We have a strong readership and base in the Middle East and Africa, also into Europe, Asia, and in North America. Just a tiny little intro on my background. Many people would phrase me as a serial entrepreneur. I'm not a massive fan of the phrase, but we'll go with that. I started my first business back in 2010, which was actually in life sciences. So another phrase that people classify me by is a jack of all trades and a master of none. So take away from that as you will. From starting those businesses, I also traveled around quite a bit. I've set up manufacturing sites in India, lived in India for about 2 years. Also lived in Shenzhen in China for 1.5 years. Lived in Japan for 1 year. Despite my youthful good looks, there's a fair number of miles through that I've been. And back in 2013, I think it was, I was fortunate enough to sell one of the businesses and move back to London, where I was originally born and bred, and took a job working for the UK government, helping and advising technology startup companies in how to do international business, and trying to give them some advice and support. Did that for a couple of years, and was then actually moved over to the Mayor of London's office to start up a program called the Mayor's International Business Program, which again looked to focus very much on high growth technology companies and helping them to internationalize. It was about that sort of time that I got the fintech bug, is what I would call it. Being around all these really interesting London-based fintech companies and this sort of market, I really found the interest in fintech as a whole thing. As with most people, probably starting off with looking at things like bank challengers and challenging banks and neobanks. And my analogy with that has always sort of been is like, you look at this thing and they call themselves a bank, and you open up the hood of the car, and underneath it you see a Barclays or a Lloyd's engine inside it, and you think, oh, that's not a real bank. They're just they've made something a bit different on top of it. And that's one of my favorite analogies of how to explain sort of like fintech, as it were. It's a lovely new shell over something else that's been around for a long period of time. And sort of that same terminology, I think, kind of is starting to come into digital assets, and how we look at these sort of things. And I'm a firm believer, again, because of my background and not specialism, is trying to simplify and understand what people actually mean when they say about something. So a digital asset is a far-ranging term. And what we're seeing now is we're seeing lots of countries, governments looking at digital currencies, which are saying, right, okay, what is that? What's a cryptocurrency? And the differentiations between the two. So I think there's a lot to be sort of discussed about the positioning and the different options that are available with digital assets.
Thanks, Mark. No, I would completely agree with that. I think we are in that position where digital assets can mean 100 different things in terms of a digital representation of value and what that means. What I want to do is throw a question out to the panel as a whole, first of all. Alice and Hisham both picked up on this. I think Hisham more from the region's perspective, Alice more in a global sense. But I think the expression you used, Alice, which I've used a lot of time out of frustration with clients, is this is still regulated, the digital assets and the payment and the wider fintech space at a domestic level, which makes sense because we obviously have countries and governments and things, but there really needs, but the fact is a lot of these solutions and in the digital asset space do not lean towards such fragmented approaches to regulation. They need something a lot more globalized and aligned. And so if you can each give me like a minute or two as to whether if you've got a kind of you think you've got a solution to it. I've got a couple of ideas as to what we could be doing better, I think, as an industry, but how you think we can get better at making a more a regularized playing field, if you like, for regulation of financial technology, but particularly digital assets. So Alice, do you want to go first?
Yeah, sure. I can actually start with an example of, I guess, like the first, I would say, kind of regulatory compliance issue that we're tackling in the market. At Nota Bene. So essentially, there's a old rule in existing financial system called the travel rule, which is essentially, think about a wire transfer between two parties. The relevant banks need to exchange customer information with each other. And as of June of last year, this has been extended to virtual assets. And this has created a bit of a nightmare for all the companies in the space because, as you can imagine, like it just looks inherently very different on the technology side. And right now there's a bit of a race in terms of how to kind of, I guess, be able to implement this at the company level. Now, of course, as you mentioned, on the jurisdictional level, there's going to be some differences in how that's being implemented. And some of the ways in which the Financial Action Task Force, so the global watchdog, is working with jurisdictions to create a bit of a level playing field is by creating a very robust framework where more or less this is, or I guess almost like a minimum viable robust framework. So essentially then most jurisdictions can adopt a bit of a similar playing field and then add above this a few more, I guess, depending on the risk averseness of the jurisdiction, add a few more aspects to it. But even then, right, as I said, because of those kind of like additional pieces, it's already creating some differences in terms of what needs to be implemented on a company level. And one of the big, sorry, go ahead.
Oh, no, go ahead. No, please finish.
Okay. Yeah, no worries. Yeah, and so essentially one of the ways in which we're starting to tackle this is creating private sector working groups that work together with the jurisdictions to help advise them on creating that level playing field in terms of the regulation itself. And then also on the technology side, then be able to adopt into our software almost, I would say, I guess, almost like a plug and play aspect. So essentially, basically, the customers are able to, by jurisdiction, be able to implement those differences. However, it is still a big issue, and I'm not sure exactly how to completely solve it because it does require effort from the regulators.
I agree. Hisham, so in terms of then your engagement with, say, the regulators in the GCC and, you know, the various government authorities that support fintech business, how have you found that? Is it been all, you know, a uniform positive thing? Is there kind of more you'd like to see in terms of support, and how engaged do you think the private sector is in terms of helping develop suitable regulation?
Yeah, great question. Honestly, I really do applaud the regulators in the region for being so forward-thinking and trying to adopt financial technology as, you know, a beacon of innovation. My concern is that they're doing it sporadically and independently, and there's very little to any collaboration, which obviously will lead to asymmetry in the way that these regulations are implemented. Unfortunately, because the region is so cohesive from a kind of a markets and society's perspective, yet so fragmented from a regulatory perspective, you end up in this kind of catch-22 situation where you have companies that do want to be cross-border, that do want to operate, let's say, in 3 or 4 markets at an early stage, and they end up just racking up legal fees because the regulations are so difficult to interpret. So that's good news for lawyers in the region. It's not so good news for you know, fintechs in the region that are just starting up that can't, you know, fully interpret this. I actually agree with Alice in that I think there is an opportunity here for technology to be, you know, I'm envisioning it more as kind of a passport. You know, if there's a way for, you know, Schengen visa holders to enter the UK, for instance, there should be a way for someone who's regulated in Saudi to enter and operate in the UAE. That type of alignment, we haven't arrived at yet. I think we need some technology to kind of plug the gap and solve that barrier. But I'm hopeful that in the next few years, if there's a little bit more dialogue and collaboration, we'll be able to get there.
Mark, on that, could you, given you've got you know, quite a long story career and working in lots of different markets, were there any that jumped out to you as an example of a kind of regulatory framework which was very supportive at developing, you know, technology, in particular financial technology?
Yeah, I mean, I think it's a really interesting comment, and I think the fundamental issue is that you're dealing with, you know, if we look at the fundamentals of how digital assets are built on blockchain technology, which is a distributed ledger technology, it's all about decentralization. Now, the fundamental issue with using decentralized assets in a global way is you've got to try and centralize them in some way. So it's almost like an oxymoron sort of scenario. And I found that, you know, especially if you look at, you know, in Europe, we probably have one of the most long-standing regulatory environments across the European Union. I'm not going to go down the Brexit road or anything, but, you know, in theory, we had a passporting rights between European entities for legal entities and for financial entities to be able to hop in and out of each other's jurisdiction. Now, the fundamental issue that you have, not just with digital countries, but with all regulation, is that requires each regulator in each local region to trust the other regulator in the other region that they're talking about the same things and doing about the same things, you know, and that for one of the most sort of heavily sort of like looked after regulated environments, you know, around the whole world, has been a major challenge. And so I think the sort of the idea that with no disrespect to my panelists, technology is going to save us in some way and be able to bring together all these regulations. Unfortunately, technology is not a silver bullet. It's not going to it can enable, but it will not solve. The biggest problem we have is regulators need to come together. And I think that the closest thing I've seen to that so far of a sort of a small alliance that by monetary they were trying about that, I think, was probably about 2 to 3 years ago, and the last time I heard something about how well it was going was probably also about 2 or 3 years ago. So it kind of gives an indication, I think, of how complicated it is. So I mean, that's obviously from a commentary point of view, it sounds as though it's kind of a terrible thing and not very good. But I think what we kind of need to focus on is we need to try and figure out a way for the consumers to drive that requirement and to actually force the regulators in their regions to adopt something. Then getting into, you know, in payment terms, it's a SWIFT network. In payment terms, it's some form of, you know, Ripple network or something like that. So that's where I kind of see, you know, as Hisham said, technology can give us the answer if our government and our regulators could actually agree on something.
Thanks, Mark. Moving on quickly, one of the very famous expressions that a lot of Silicon Valley startups uses, maybe it's a Facebook one, is move fast and break things. That's obviously quite an interesting proposition when we talk about global financial sector. So we've talked about regulation and getting it right and things, but be interested if everyone can kind of give me, say, 2 or 3 of what they consider the key risks to the kind of traditional financial market moving into this new stage of financial technology. So putting your kind of negative hat on for a second, what do you think are the real risks that we need to address, both from a regulation perspective, but also a technology one as well? And anyone feel free to jump in there.
Shall I have a go first on that one? And I'll keep it short. But I think sort of like it's a wonderful phrase, you know, move fast and break things. Do you want someone to move fast and break things when they're holding on to your money or your assets? Probably not so much. So I've always found it as a very strange sort of saying. I think, you know, the massive risks, and this is in digital identity and the KYC and the AML rules. This is where all the biggest risks are at the moment, and that's why, you know, is the term that people are using for it. All trying to figure out how we can actually police this, what sort of technology can we put in place to do that sort of stuff. And I think that kind of is the main issue, and I wouldn't really think there's too much else outside of that. So that's my 3 pennies worth.
Yeah. I just don't think it's suited for the financial sector because, you know, basically you're operating in an industry where incumbents and you know, institutions like regulators and banks have been operating for many decades, and they've been operating with a particular culture, a particular mindset to de-risk and to stabilize. And so in comes this, you know, very excited startup that sure might have a strong value proposition, but ultimately will create a lot of damage in the way. And that unfortunately creates a stigma against a whole sector and a whole generation of people that are trying to do good. And so what I usually advise my peers and my coworkers is let's do the right thing, not the fast thing. And because ultimately we're carrying the burden of proof, not just for ourselves, but those that are coming after us. And we need to do this right in order to gain the trust of the generations that came before us and built this industry. So yeah, I don't think it suits very well, and I think that's what you were trying to fish out there. So.
Yeah,
thanks.
And Just wanted to add very quickly, I agree with both Mark and Hisham here, and wanted to add, I guess, some of this here as well, is that inherently there's a misalignment of incentives, I would say, between the regulators here and businesses who have been trying to kind of move fast and break fast, because ultimately, as part of their business model, they try to create lock-in effects and make it really hard for consumers or enterprise or whoever their customers are to kind of switch out. And I think that's a big risk here, because obviously the regulators and governments are trying to protect consumers in that sense. And also, I would say the last risk here as well is the complexity in terms of like what they're building and taking it kind of at face value. So even if, for instance, there's a lot of, I would say, if you think about like developments in terms of APIs and all this, which makes it kind of really quick for any company to be a fintech company. On the other side, cyber criminals keep getting more smart, and cybersecurity is still a big issue. And inherently, as Mark said, do you really want your money, I guess, to be at risk here?
Thanks, Alice. Okay, conscious I've got a couple of minutes. So one thing I just want to kind of get the panel's view from each of you. I think Alice, you used a great expression where you described the kind of the race for, digital currencies or central bank, issued digital assets as a space race. And Hisham, you said, you were long on fintech. So can I get a barometer for your sense? Do we think that we're going to see all manner of digital, of all assets, of all classes, moving into the digital space in, say, the next 5 years? Or do you think that it'll still continue to be a meaningful part of the global financial sector, but not the standard?
100%. I mean, no doubt about it. 5 years is short, but I have no doubt that identity will be fully digital, and hopefully that'll make it more secure and more valuable.
Yeah. Thanks, Hisham.
Yeah, I agree with Hisham. I think it's more of a 5 to 10 years. I think one of the core components is that digital identity and the ability to be able to tie an asset or real object, person, or entity to a digital asset. When that is solved, I think, at least on the technology side, it can move fast. But of course, on the regulatory side, that needs to also move fast, and that just takes time.
Yeah, just for my 2 minutes with that as well. I think ultimately digital identity is where we're all moving towards. I think the problem we have at the moment is we have governments and regulators and other laws such as GDPR and PSD2 that are actually holding us back from actually implementing some of the technology solutions. So it's going to be quite a rocky road, I would say, over the next few months and years, because we're going to have to unpick some old rules and some old laws before we can implement some new ones.
Yeah, I agree. Thank you for everyone. That's pretty much bang on time. That's been really helpful. I mean, my takeaways are everyone is very supportive and fairly bullish on this, but I think we all recognize there's quite a bit of work still to be done to get proper alignment between industry expectations and what the industry wants to properly develop, and what we need to see on a global basis from our regulators and governments. So yeah, that was really good from my perspective. I enjoyed it a lot. Thank you.
Thank you very much.
Thank you.
Thank you. Thank you so much to Tom and the other panelists. Dubai, London, New York and Saudi Arabia joining us for Step Anywhere 2020. Thank you all once again. We have so much lined up for you. Do not go anywhere. Day 3 is well underway. Our first talk and presentation of the day from Berlin. That's right. Manuel Dolderer on the way, discussing the pioneer's mindset next.